All right. Good morning, everybody. How's everybody doing on this fantastic Tuesday morning? That song goes pretty damn hard at the end. I like it. I like it a lot. All right. So Bitcoin's fallen today. It's down about 5% on the day, 5.09%. Basically, it got caught by that supply zone up there. Daily supply. It holds very nicely. We tested it on multiple occasions 1, 2, 3, 4, 5, 6. Yesterday didn't really test it, but the day before was a pretty close test. We noticed this level and we were actually watching for support to hold down here, daily support. You can see yesterday you blasted through it but closed back above, and then this morning you have dropped off. Now, if you remember, since the 13th, when Bitcoin actually made its high day close here, we did get the initial pullback, and I was expecting risk markets to do the same. However, with risk markets, they just kept making highs and highs and highs and kept on going. So it was a little bit, we were very cautious. Let's just say that, with only like risking 1% or something at daily support, looking for longs just in case they wanted to break out and make fresh highs. The problem is we've got oil moving higher, and that's making inflationary fears a real thing, because oil does indeed affect inflation. So the higher it goes, basically the higher your headline CPI number is going to go. PCE came out Friday. Friday was a holiday. The markets were closed. Well, the stock market was closed, and that's when PCE came out, and it wasn't bad, but it wasn't great either, as it is sticky. So now we're starting to see where we were seeing a rotation in stocks, basically moving out of tech into the broader market. Let me see if I can pull this up real fast while I'm thinking about it, or actually on the subject here. Give me 1 second. And there we go. Let's pull this up. So this was the breadth data last week for the major, or for the stock market, being the NASDAQ and the New York Stock Exchange. And you can see that there were a lot more stocks advancing than declining. This was showing us that, there was a strong move inside of that rotation trade. And then that helped bring the IWM to hit our bullish targets. So that worked out fabulously. That is not the IWM. Here is the IWM. We had a target of 212 on the IWM. I'm going to bring up a line chart here so you can basically see why that level is so strong. Here on the line chart, it doesn't even look like you got a test, because the line chart only goes on daily closes. It doesn't show wicks, but there is massive level here at 212, 211, 81. You can see after multiple tests of support here over a long period of time, once it finally broke down, it held as a resistance there. And then we had a long period of consolidation, which is typically good if, whenever you get this long period of consolidation and you do break out of the range. The range would have been right here, around this area here. This would have been like the top edge of the range. Once we broke out and we retested the 2024 yearly open, we actually got that move higher, and we were looking for a push up to 212. So the trade was anywhere in here at $200, looking for a target of 212, and that's it, because like I said, that is a massive level. So this is the first time we're retesting it after this long period of consolidation, which is, it's fine. But we will see here if this pullback equals something more than just a pullback. So you should have taken your profits on that trade and moved on out of it. All right. Tesla's getting beat down again, but so is most of the tech markets. We can go look at all of them real fast. You got Microsoft down 1.616%. You got Apple down almost 1%. Nvidia's down 2% today, and it looks like it's continuing to go. This is good. This is what we want to see. Markets that just go straight up without pullbacks is not healthy. It's not healthy at all. So basically, we were looking for the S&Ps to pull back. We finally got that move. Now, I wouldn't be opening new shorts here just yet. Obviously, you're at the bottom edge of the expected move. Today is Tuesday. I'm not exactly sure why Monday looks like it's in last week's expected range, but I gotta fix it. Oh, that's why. I'm gonna pull this over here. Anyways, so there you go. You're at the bottom edge of the expected move. And in this bullish rally, if you will, in this bull market, basically every time we've come into the bottom edge of the expected move, you've had a pullback, or that's been the area to look to sell puts. Bottom edge, close to the bottom edge. You still had a little bit of wiggle room in there, but there's the bottom edge, bottom edge. You get the idea. You're at the bottom edge again. So what we basically want to see, if we're going to expect more downside, like a deeper correction, is we definitely don't want to see it go up and make fresh all-time highs. Because if you do, then this is just going to be looked at as another buying opportunity for everybody that's been literally buying stocks like crazy. You can see you're not even testing the 21 yet. So I mean, this isn't a huge down day. You're only down 1% on the S&Ps. It's a pretty big down day, but it's not huge. As you can see here, you're still inside of the upward trending channel. Basically just coming back into a resistance test to see if it wants to hold a support. I would love to see this thing break down, because I actually do have 2 short calls on the ES futures. So I would love it, love it if it were to break down and continue a little bit lower, as I can get out of that position. As I took the position last week, and it was 2 weeks ago. It was on the Fed day. I took the short call once we got up to the top edge of the expected move. And as you can see, that trade was getting absolutely killed. Now, since I sold the calls, basically that means I'm short calls. So I want either this thing to go sideways for a while or down, sideways to down. I don't want it to continue to climb. And then, because when you sell a call, essentially what you're doing is you're just selling time, right? You're getting paid to just sell time. And it's just been a straight up rocket ship. So we were looking for it to pull back, because Bitcoin had already pulled back, and Bitcoin was leading the risk markets. Basically, by what I'm trying to say is, Bitcoin is still traded as a risk on asset. Even though the halving is coming up, this thing has already made all-time highs, which is the first time in history it ever did that. But you don't have very much longer to go before you get to the halving. So I would actually like to see a pretty deep correction on Bitcoin as well. And then I would like to see it hold support and move. But as we know, with Bitcoin, we've looked many, many times back at all the halvings in the past, and it doesn't just blow up as soon as you get the halving, right? Sometimes it took weeks before Bitcoin actually started to make higher highs and higher lows. But I mean, it's been doing it for 2 years now, right? All of 2023 year move was higher. Here's your 2023 yearly opening range. And then for all of 2024, well, the first quarter anyways, was a big blowout move. This was actually the move that broke out and made fresh all-time highs. We just started a brand new quarter. So we are just now starting Q2 of 2024. So yeah, you can see there you're getting a pullback, which is nice. I mean, I'm not gonna try to guess where this thing's going to stop going lower, but I definitely do not want to see it get under the yearly opening range. I definitely want to see this level stay intact. If it were to pull back maybe half this candle's range, around 55,000. That would be a good area for potential support to hold. Or over here, even could see maybe some support come in. We'll see. This level did act as resistance in the past, even though it did get a very, very far move after breaking through the resistance, and it took a long time. So it's, it's going to be difficult to pin it down on a daily basis, but we're going to keep our eyes on it. But daily supply, once again, I mean, man, if you're looking for shorts, these are the areas to look. I just don't like shorting markets that are straight up, right? I mean, that's how you get wrecked. Every time the market puts in a high and consolidates, if you're trying to short it, you're going to get smacked. But after this pullback here, when we started testing this was a very, very good level to watch if you were looking for shorts. But if you did take the short there, I would advise you to take profits. Move your stop to break even, because we don't know what's going to happen in the future. We never do. But yeah, most of your tech's getting killed right now. Financials and energy are the only two sectors that are bullish today. Oh wait, no, the XLF is no longer bullish today. All right, so XLF, the financial sector, is, as you can see, was a major factor in this rally. Basically bottomed out at the same time on the same day in October, and just went straight up from there. On a weekly closing basis, this chart is disgusting, because literally, like, you don't see this happen very often at all. If we go from that low and then over to here, that's 23 weeks of trade. And out of 23 weeks of trade, only 2 of them closed bearish. And this one would be arguably bearish, right? Because it closed as a doji. So, I mean, 1 tick higher, essentially, or like 10 cents, and this would have been a white candle or a green candle. It would have been an up closing candle. So very rarely will you see 23 weeks pass by and see that many green weeks closing. So it would be nice to get a pullback, right? So we can basically find support, or if the inflationary fears are real, then the markets may pull back even deeper than expected. But please do not be looking for new shorts today. Not on the S&Ps. Basically, what I would do is I would let this thing pull back a little bit. Maybe watch last week's open or something like that, as that would be your weekly supply level. Let's go look at what it looks like on the daily. Yeah, that's where I would watch. If you get up there and then start closing dailies above it, then you're probably going to see fresh all-time highs. So yeah, be careful. We have seen big down days in this rally, but they just only lasted for a day or two, and basically moving on up is what happened. So we've been red for the last 3 days as far as the futures are concerned. And on the major SPX index, you can see that you've only gotten 2 down days there. So bottom edge breaking through. If the XLF and the XLE break down, we could see a pretty big move lower, and that would be fantastic for me. Also, gold absolutely doing exactly as we wanted it to do, which is fantastic. The last time that we were live, or the last video that I put out, I was basically saying that we were in this area here, right? And I was like, I want to see this thing break out above resistance there and start testing the top edge of this trend line, or break out of it. And it did do that. The reason I wanted that is because I'm in a long position on gold, right? So I would love to see this continue as well. I'm probably going to close that trade out and wait for a pullback. I'm not actually in gold. I bought a mining company, essentially, down here. Once we breached back above the yearly opening range and closed above, I took the long here with calls, and I've basically been sitting in this position since this day. So obviously I would love to see this thing continue, but it's a pretty good move. This was the level that I was watching to close the trade, $20.45. If it were to close another daily under it, I didn't freak out on the first daily close because we know traps exist, and this was a trap. So basically, I held on to it. I'm glad I did. As you can see, we did come back and retest it after proving that to be a trap. Right there, this candle's the trap. So once you take out the high of that candle, that basically tells you that there's a chance that this could be a trap. So any pullbacks or retests into that level would have been a good spot to look for long entries. Basically, everything is red over here on this watch list, except for a few things. Oil's up today, but it is pulling back a little bit. You got daily res over here, but it's in a range, right? Longer term, it's in this huge range. It's been in this range for a long time. And a lot of people have been getting really bullish oil or energy. So that's why you see a lot of these lower down in here are energy trades, ExxonMobil, and then we got ConocoPhillips. Both of these are an oil trade. Haven't been able to get entries on them because they have been doing literally the same thing as most other stocks, just flying straight up. But we have seen that rotation go into the energy sector. So we're basically going to be watching the sectors here. I did take a short on XLF. It's not the smartest trade to do, but if you want to take that same trade, you can. All I did was bought an in-the-money put. I will show you real quick right here. XLF, I just bought a $42 strike put. May 10th, 38 days away. So that's basically what I'm looking at there. And I am going to look for other short trades as well to see if, we get a deeper correction, but I don't want to be in the wrong sector. One sector that I am keeping my eyes on is retail. You can see it is starting to pull back pretty good here today. If you go look at your higher end retailers like Lululemon getting absolutely murked. So is a lot of other ones. So Walmart is the trade that has not broken down yet. Oh, it's breaking down today. Never mind. All right, so probably going to have to wait for a pullback. I'm not going to get short right here, obviously, because as soon as I do, it's going to go right back up to resistance. So I'll just wait for a retest of resistance or a pullback of some measure, 1 or 2 days, and then maybe look for a put spread. Let's go see if that trade will work. Let me pull this back over here. Let's go look and see real quick on Walmart if we can build a put spread. We need to see what that implied volatility is doing. Yeah, it does look like a put spread is valid. Let's go. Come on, there you go. A put spread is very valid because you can look at your implied volatility and you can see how the numbers are getting higher the lower you go. That's what you want when you are looking for a put spread. So basically what we would do is we would go in here and sell or buy the $60 strike and then go down about 5 strikes. Well, we won't go down 5 strikes because you can see there, that's where you're going to be. You're going to be well under the expected or 1 standard deviation of a move lower. So maybe just do a $2 or $3 wide spread. And you can see it's going to be very, very cheap. And you're going to be able to make more than you're risking on this spread. And obviously the lower you go, the more potential profit that can be made, but you're going to spend more. So even a $4 wide spread here looks good. For $1.19, that's not bad at all. Not bad at all. But we're going to wait for a pullback. We're going to wait for Walmart to pull back first, and then we'll look to take that trade. We got plenty of time before the next earnings comes out on it. So it's a beautiful candidate to look for short trades. The retail sector is getting hurt pretty bad right now, especially a lot of your higher end retail stocks. Nike, for instance. Nike's been on the short list for a long time. We did take a successful short trade in this, but you can see that it literally is just rolling over. It's in a beautiful downtrend, making lower highs and lower lows, which is like what we want to see. All right. So, yeah, we're going to keep that up. What's up, Brandon? Good morning, everybody. Good morning, Ben. Good morning, Oxum. Tesla John. Morning from Coco. Have you take a look at LTCN, please? Thank you, and have a great day. Yeah, we can look at that real quick. LTCN. This is going to be Grayscale Litecoin. It's absolutely rocking. I have no idea why. No idea why this thing is on fire today. As Bitcoin is down 5%, this thing is up. Let's see. Up 16%. I definitely, I mean, if you've been around long enough to know that you're not gonna like what I have to say. This is not something to buy right now, right? You want to buy it when it, when it pulls back or finds support somewhere, consolidates for multiple days at a support level or around a support level. Like in here, you can see you got multiple candles trading. This is a consolidation formation. That's the time that you want to look to be a buyer. You don't want to look to be a buyer when something is absolutely mooning, because what's going to happen is as soon as you get long, it's probably going to pull back and you're going to be literally holding the top bags. But I don't know why the Grayscale Litecoin Trust is moving up. Well, Litecoin is having a pretty good week. It's even having a good day. So there might be news, right? There might be some news around surrounding Litecoin. Has to be, because all like Ethereum's down and Bitcoin's down. So, Bitcoin is, I like to consider Bitcoin the ocean and all the other altcoins or whatever as the boats. And, Bitcoin's tide. If it's up, they're up. If it's down, they're usually down. So since Litecoin is having such a great day, I would assume that there's probably news surrounding it. But it did give you an opportunity to buy daily support. You could have been a buyer there or even there, right? Either one of those two areas, you could have been a buyer. Yeah. It does look like Bitcoin. It did have a pullback pretty much the same way Bitcoin did, but it did breach and make a fresh high, although it isn't its all-time high. So Litecoin has always been a laggard. I don't think Litecoin even made fresh all-time highs back in 2021. It didn't. You can see over here, back last time Bitcoin went to the moon in 2017, Litecoin made an all-time high. That all-time high has never been breached. So Litecoin is a laggard. It's a little slow, but yeah, it's having a good day today. That's for sure. It's kind of weird. Let's see here. Taking profits on a good job. Reason is CFTC called Litecoin a commodity recently. All right. So there you go. News, right? Fresh water. Yeah, whenever I see something like that, I already contribute news or something happening. I just don't know, because like I'm not a huge Litecoin fan and I'm not like reading crypto news every day. I spend my days looking at charts and trying to find positions in stocks and options, Forex, crypto, but mostly Bitcoin, right? When I talk about crypto, it's mostly Bitcoin. Yeah, mostly Bitcoin. But I will keep an eye on, if there are some high flying alts going on out there, I might, participate in the momentum. If you're going to day trade it, then yeah, I don't see a problem with that. But I don't think I'd buy LTC in right now. Not yet. Not right now. What is this? What I got going on? Oh, USD-JPY. Yeah, so everybody's expecting this to ultimately pull back, but the dollar has been strong. It has been rallying with stocks lately, which is strange. Today, the dollar is pulling back based on an old swing low right here. I mean, that is definitely a swing low, right? There's your chop and then your breakdown, re-breakdown. So that's a major support level right there. And basically, that's where the dollar has found resistance. But I would probably expect it to continue higher because people are going to run to cash like they usually do if they are worried about something. I'm not saying that the markets are going to crash or anything like that. It's the second day of a new quarter. So literally this could just be a pullback, right? On most all everything that's red. This could just be a small pullback. We were looking for risk markets to pull back based on the fact that Bitcoin had already pulled back. But, this thing just kept going to the moon. Even NASDAQ had some red days last week, and this thing just didn't do nothing, really. But it's pulling back now, and that's good for me. It definitely needed that. But I just needed to stay under the blue line for, some time and allow that premium to just go away. And once that happens, I can exit out that position. But I might look to buy a put if we do get a pullback. All right. But like I said, you can do that other ways. You can trade one of the sectors instead, as most sectors have been extremely bullish. They are now starting to pull back. XLK, which is your technology sector, it does look like a constructive consolidation here. So what we definitely need to see it break down something like that if we're going to see further downside on the stock market. As far as Forex goes, since the dollar's been rallying with stocks, it's made it a pretty difficult trade. Euro USD, obviously, you would be looking for shorts. I got a lot of lines on the chart. I know it looks pretty disgusting, but these are levels that we were watching. I actually got short on this day on the euro, but I got stopped out as it went much higher than I thought it would. We were already at an old area that used to be demand, and we broke down into the demand, but held the support level here, traded back up into the demand level, old demand. I thought that we would probably stop there. As you can see, this wick and this wick both showed that this line or this level, price level, was very significant. And it ended up being, I should have waited until the next day to trade it, right? But I was trying to get that perfect entry. Ended up getting short at the line here and ended up getting stopped out later on into the day. Well, into the next day. But I was, direction wise, I was right. Timing wise, I was off. This would have been the better entry here. Just giving it time, having some patience, and allowing the trade to set up. But I'm just like everybody else. I get a little bit too quick, right? Sometimes my entries are a little off a day or two. And that definitely sucks. The small account is definitely struggling right now going into Q2 of 2024, but I have no doubt in my mind that we will be destroying the S&P by the end of the year, right? So we're not really worried about it. We're not concerned with it. but we do have a few things. TLT did not do what I thought it was going to do. I thought it was going to get bullish, and it's having a pretty big down day, as you can see. So we were watching it for a pullback and then looking for a potential breakout. But the main thing was the moving average structure was still bearish, right? And this Sunday, I have a live stream every Sunday for my channel members and Patreons. And basically, I was telling them it would probably be better to wait until we break above the 200 exponential, maybe even get up above January's close before starting to look for bullish entries to allow, price to actually break out. Because anytime you see, like even this right here we were still bearish on it. Whenever your 200 is above your 100, that's not a good look. And right now the 50 and the 100 are pretty much together, but if I pull it out, you can see the 50 is just popping under it there. Right there, that green line, that's your 50. So basically, all of your moving averages are structured bearish. That's also why I was looking for the dollar to roll over. But the dollar did exactly the opposite. Even though it was mostly structured bearish, it actually broke out. See there? So when we were trading over in here, I was actually looking for this to be the signal for it to go lower. And that's why I took right? So obviously you can see that is a beautiful bearish engulfing, and the moving average structure was bearish. So this move right here is nothing more than a short squeeze for now. So we'll see if this has any legs to it. Moving averages are starting to curl up, which here's your 50 crossing above the 200. The purple line and the red line is your 200. The red line is your 200 simple. The purple is your 200 exponential. 50 is crossing it. That is what is considered a bullish signal. It is a golden cross. So we'll see if the dollar is able to find support and continue to go higher. Only time will tell. It is also in a longer term range. So moving averages are not very helpful when an asset is in a range like this, because moving averages are just they're not going to be able to help you because you're not trending. The dollar has been in a 2-year range. So it's got to either make fresh highs or fresh lows. With that being said, you are bullish on the year. There's your 2024 yearly opening range. This yellow line is 2023's yearly opening range. So you are above both of the last 2 years opens, but we'll see if it is able to maintain this rally and maybe start a new fresh trend to the upside. If that is going to happen, then I would be still looking for euro dollar shorts and pound dollar shorts. Pound dollar, basically this trend line on log has held the pound for its entire life. Let's go over here and put it on log. You can see you've never been able to close a quarterly candle above this. This has been moved. Who moved my trend line? There you go. So we were basically expecting this thing to hold again, and it has. We did trade for a few days above it, but ultimately, I mean, that would have been the perfect short there. Just wasn't able to get in because most of these moves have been happening during the London session. But we are waiting. I mean, if the dollar is going to trend, then this will too, right? Longer term, you're in a range here, so there's no reason to get all, poofy and think that you missed the move. You haven't yet. And as far as I'm concerned, it's just getting started. Just getting started. Moving average structure still bullish. Everything's laid out the way it should be for a bullish trend to continue. So we'll just let this thing pull back into resistance, maybe back up to the March open, or, even higher if it wants, and then we'll look to attack it to the downside. It's been in a range long enough. Maybe we can get lucky and catch a trend like this here, like we got back there. And as you can see, once this thing starts to trend, it can really trend for a long time. And it moves quite often or quite fast. All right. Let me see here. Thank you, Matt. In ETH spot, would you sell some to buy at lower levels? Thoughts? It just depends on it depends on a lot of factors. You know what I mean? Yeah, I mean, I like it for the long term. I think it is going to find support ultimately and continue higher. If the Bitcoin halving works the way it has forever, Bitcoin usually has its halving, and then, weeks or a couple months after that, you start to see Bitcoin rally. So, I mean, it just depends on your position. Are you in profit by like a large margin? If that's the case, then yeah, taking some profits would not be a bad idea, because we can't see into the future. We don't know what's going to happen. We don't know that Bitcoin's going to rally and make fresh all-time highs, right? We don't know that. We know that it has in the past. But yeah, for sure. I sold some of my Bitcoin spot because it just started to get too big. Because I trade the inverse swap contract on Bitcoin. So whenever I win a trade, I make more Bitcoin. When I lose a trade, I lose some Bitcoin. But I do that so that way I can build my Bitcoin bags up. Instead of buying Bitcoin, I just trade my way into owning more and more and more of it. So the position size got so big in the cold storage wallet that I essentially took profits at $35,000, because that was my yearly target for 2023. So, once my target's met, I take profits. I took 1/3 of the position off, basically, just waiting now, right? Just waiting and trading it. However, I did not short it at that daily supply. Looking back in hindsight, obviously that would have been a fantastic short. So if we're going to see continuation of downside, then we'll just wait for it to find a resistance level, and we'll look for shorts lower. But as far as levels go on Ethereum, the near term close levels that I have for support are going to be 29, 21, 79. That daily support there, 31.56, which is just this support level here. And you can see we're breaking down below this support right now, 33.30. But it's, the daily close is what matters. Just because it's under the support right now does not mean that it will close like that tonight. Right? So just, watch the close. Are you above or are you below? But yeah, it just depends on how much you got, man. Right? If the position is affecting you or it's not allowing you to sleep, then yeah, you definitely want to take some profits. Since $15, nice. Probably I would take some profits on that as well. Yeah, you're in it since $15. I mean, you've more than tripled your money. You might as well take some profits. I mean, obviously this thing can continue to run, but nobody knows what it's going to do, right? So the way I approach markets is simple. If I am up and I'm up nicely, I'm going to always take profits. That's just the way I roll. I would rather take profits and then leave a small position open for any upside continuation. That way, if you don't get upside continuation, if it actually rolls over and comes all the way back to your entry, you're not going to be beating yourself up. You're going to be like, well, that's fine because I already took profits, so I'm good to go. Right? That's what we're in the marketplace for, right? Is to make money. I don't understand why people will hold on to positions forever and ever. I mean, unless it's like a long-term hold, right? Like I have a portfolio that's all it is, right? I got a bunch of stocks in it that I just own. I don't do anything with it. Occasionally I buy more, but I rarely do. I rarely touch it. Most of my income is from Bitcoin profits and from, uh, you know, the trading accounts. I have multiple accounts. I got 2 Forex accounts. I got multiple crypto accounts, multiple stock accounts. So, I mean, I do all sorts of trading. I day trade mostly, but I am also a long-term investor. But yeah, you should take profits, John. Good morning, Mr. Jian Kim. XRP. Yeah, XRP Army in the house. It's in a long-term consolidation on a monthly level. Yeah, I mean, it had a nice move up to 75 cents. XRP likes to hang around the 50-cent level, like around, 49, 47 cents. It likes to spend a lot of time there. It looks like it's trying to pull back to that area there now. I don't think I would use that daily support. I would probably find a bigger support like a weekly or a monthly. You got monthly support down here, and then you got last month's open here. That could act as support for sure. That's where you're currently testing. That's last month's open. That's March open. It's an objective price point that could absolutely act as support. We did test it here, right? And then you were not able to make higher highs. And that's probably because Bitcoin stalled out at daily supply. Like I said, whenever Bitcoin's down, I expect these things to go with it. Most of them, not all of them. Obviously, you can have outliers, like one or two that might be mooning right now, but most of them, the majority of them, are going to follow Bitcoin's motion, whichever direction it goes. But I mean, I could see buying a little bit more down here at 50 cents. Absolutely, that's monthly support if it gets down there. Since it is, so cheap, this is one of those that you can just buy and hold. You could just take a couple $100 and just throw it in it and don't ever touch it, right? Add every now and then. XRP had really good news back here when I guess the whole court debacle, but you can see that it pulled back. That's the thing I don't really like about XRP is it's not been able to trend. Longer term though, this is a good looking formation. It does look like a lot of accumulation is going on. I mean, on log, it looks good. Off log, it doesn't. You know what I mean? But that's just all of crypto, right? But it does look like a longer term consolidation formation. And you are making higher highs and higher lows on the monthly. And you have been for a while, right? So something like that. So it'd be nice if it can hold this. The fact that it did make a higher monthly close and you're pulling back now, it could be a good time to buy, actually. It just depends on what Bitcoin does, I guess. Or if the XRP army is still accumulating, holding and buying. What you need is more buyers. You need new buyers. A lot of them. So yeah, I mean that's about all I got on XRP. 58 cents. And then the next area that I'd look to be a buyer for a long-term hold would be 50. And just follow those monthly support levels. Good morning, Johan. Good morning. What's your take on BTC miners, Mara Riot, and CLSK post-halving? They seem undervalued. Okay, so here's the thing with that. When Bitcoin halving happens, it makes it harder for miners to make money, right? It makes it literally harder for them to make money. That is why you see them leading to the downside. So a lot of people like to speculate with the miners because obviously when they move a lot, right? They move a lot, but they've been down for a while. Like Bitcoin made fresh all-time highs. Riot did not. All right. That should be concerning. Because if this thing is going to trade like Bitcoin, then what the heck's going on? I can understand why people want to buy it. But you just got to remember the block rewards gets cut in half. And it's more difficult to solve the problems for the blocks. So miners, it's going to be more difficult for miners to make money the more every time we have a halving, right? It's just going to make it more difficult. And that is why you've seen the pullback before you've seen the actual pullback happen on Bitcoin. Same goes for Mara. I mean, it looks almost identical. We were talking about potentially selling calls on Mara because it's got such high IV, implied volatility. Like you can just sell 12 days out and make decent money on it. Decent money. Like there's just money to pick up. Right? So here, I'll show you. Go in tomorrow, look at the IV rank over here. I'm talking massive IV, 121, 125, 126%. So like I would never buy a call or a put on this ever. Because the IV is just too expensive. However, what you can do is you can sell calls. You can sell puts. I wouldn't sell puts right now because you can see equidistance. They're not the same, right? So this little ruler looking thing right here, this is the expected move based on the implied volatility. The expected move is $2.81 in 10 days. So basically, it's setting between $20 and $20.50 right now. If you look at equal distance apart, the premium on the calls, 67 cents. The premium on the puts, 43 cents. So what does that mean? That means there is more people buying calls. That makes them more expensive. Therefore, it's an opportunistic time to go out here and sell them. Now, I know $50 doesn't appear that attractive. That's the most you can make is $49, right? Max profit, $49. But it's only $820 worth of buying power or margin to sell that call. So you can literally just sell the call. $24 call is a little close, but, you know, sometimes it's free money when IV's that high, especially if the buying power for the actual asset is cheap. Yeah, that's where you'll find me. Picking up pennies, right? Just keep making $22 every 10 days. $22, $22, $22. And every now and then you're going to lose money. But as long as you manage your risk, manage your risk, you'll be all right. Get out of it once you're down, 1% of your total account's equity. But more case than, not. Whenever something forms a range like this, that's what you want to do. You want to be a premium seller, especially since it's the IV so high. IV so high. I would definitely be a premium seller in this. But that's why they're not participating, right? Because the halving is coming up. Now, Clean Spark, on the other hand, doesn't look as bad as Mara and Riot. So maybe it holds support here in this range. Maybe it gets down in here and holds, but there's no guarantee it will. If you're going to buy the stock itself, that would be the best way to go. But I would probably wait till it gets down to $15. And it's coming off pretty hard, right? I mean, you had a couple nice green days there, 3 nice green days, but you've almost given back every bit of that. And this thing moves. It's a mover. Like just down, that's almost a 50% drop right there. Just back down to $9 or $13. Maybe this is where it finds support. Old swing high. So that's probably where I would put my entry, only if it shows me that it can hold support. And sometimes it takes days to do that. You can't just buy it, on the first touch. You got to let it, give it some time to build in that support. I have a stop loss in to kick me out at 200% gain on half of my shares. Let the rest ride. That's perfect. Trailing stops are another good way to do it. Absolutely. 100% agree. That's a fantastic way to do it. Keep doing that. You're going to be just fine. Right? But as far as like looking at them and saying they seem undervalued, not really. The market's saying they are extremely volatile, but not undervalued based on the halving. The halving is going to hurt them, if anything. In my opinion, I could be absolutely wrong, but in my opinion, the halving is absolutely going to hurt the miners. MicroStrategy almost hit, what was that? Almost hit $2,000. Damn, that thing ripped. That's the all-time high in it. Looks like it. Yeah. It's time for these things to pull back. They've been mooning for 2 years, literally. Almost straight up for 2 years. It's time for some sideways choppy action. Yeah. And you can still make money in sideways choppy markets. Like I said, you can sell calls and puts and just collect that premium. USD CAD struggling at resistance. But ultimately, if the dollar continues with strength, this is something that I would be watching for a breakout. And it is looking like it is trying to break out. USD CAD for a longer term play. Yeah, that's I do like it as long as the dollar remains strong. I can't buy it where it currently is because it's in the resistance. And I don't like to trade breakouts on Forex because Forex is generally choppy and sideways. Like you get breakouts that happen, like for instance here, you had a breakout here. If you'd have got long, 4 days later, you'd have been stopped out. And that's generally what happens in Forex. Here's another breakout, right? You get long, 2 days later, you're done. So I don't necessarily like buying a breakout. But if it does break out, if it could start to trend, yeah, for a longer term play, look to buy support. Right now, support is setting at 135,400. It's a higher support than this, and that is higher than this. So it is doing what it needs to do in order to break out. It does look like it is trying to break out. So if the dollar pulls back for a couple days, finds support, then you can look to buy support on USD CAD. I like the 135,400 area. Retest of that, I could see getting long there. And you know you're going to struggle around 135,992 as that's resistance. I mean, it's been resistance since there. I mean, it's a big resistance. So I wouldn't buy it here, but if it were able to pull back, then I could buy it and look for the breakout. Because if the dollar starts trending, I could imagine this probably will too, right? It's just, oh my God, this thing has been in a range for so long. The longer the range, though, the bigger the breakout could be. So we'll see. But I like it. I like it higher. Just not today. Not today. Let's go look at the Canadian dollar real quick. Yeah. Yeah, it definitely looks like it's trying to break down. So I do like the long on USD CAD. Just wait for it to find support and then look for your entries. You can watch for entries on the smaller time frames. Maybe the 4-hour. Yeah. I like it. I like it higher. I can't buy it right where it is. It actually did test 4-hour support earlier today and then got a bullish bounce from that. So something like that, right? Look for something like that. Yeah, this thing can move once it starts going too. That would be fantastic. This could be a long-term trade because it's just been in such a choppy sideways range for a long time. A breakout could help it move higher for a long time. USD-JPY is probably going to go much higher. It's probably going to. I wouldn't doubt it to see it get up to close to 155 before they intervene. There is a ton of liquidity up there. You know what I mean? There's a ton of liquidity up there, so it's definitely going to go. This is a bull flag if I've ever seen one. It's about to rip, and it's going to rip faces off. I don't know how this position is still open. Because that should have stopped it out. That short I have been in since literally over here. But it should have been stopped out. I don't know why it was still open. The position in my real account got stopped out. But I made so much. I mean, this was my biggest trade for 2022. Was this USD JPY trade? I made a lot of money on that trade. Lots of money. This is a good trade. But yeah, that's what we're working with right now. Letting the markets pull back a little bit, and we'll see how what it can do here. Let's see this one, AEM. This is another gold miner, but we missed the move on this. We could have got long around the yearly open, but now we got to wait for it to chill out a bit. Apple actually making a new low today. We got daily support down there around 166.83. I actually thought that Apple would be a buy. It still may be a buy. We got earnings coming up back in April again. New quarter, new earnings. So we'll see how this plays out. Capital One Financial, this was a breakout trade that we were watching. It actually broke out and then fooled us, dropped back down in the range, and then got the real breakout. So that one has done its job. We could probably get rid of that. PBF. Oh, this is an energy stock. Man, that was a perfect buy right there, 55.21. That's the one I'm already in. Yeah, this one has just ran too much. This is one that I'm watching here. It's down on the day because it gapped down, but it's trying to close that gap. If the markets rebound, I like this for a long. If it breaks out above 88.93, I like this one higher. Duolingo. We were watching this yesterday. We were getting a little bit anxious to take the trade on a retest of support, but I said I want to give it a day or two longer to let that support build in, and I'm glad I did not take the short or take the long because it would have been a stop out for sure today. So like tomorrow, if Duolingo builds a candle that looks like this, then we can look to buy it. Put our stop down here. Target this. And those are energy plays. This one I have on just because Nancy Pelosi is long or got long this. I don't know if she's still holding it or not, but this thing is not able to hold support. I wanted to see it hold support and it broke down and lost support. So, I mean, I'll keep my eyes on it, but this is a tech play. So if they continue to rotate out of tech, then tech is going to get beat up. Woo, down 5%. Nvidia is back up. It was down 2.5%. Now it's just down 1%. Like I said, I'm not looking for a crash, but some of these things need to pull back and calm down. All right. If there's no other questions, I guess we'll wrap it up. Amazon looking strong still. This could be a good short just in case. Like if the markets are going to do that correction for a while, sideways to down for a little while, this one could be one we could look at. Let's see if this works. It moves fast, so we can't just... Oh, it's got earnings in 17 days. Yuck. 17 days is too close. Too close. But yeah, put spread would work on this too. It's just the earnings are too close for comfort. I don't like to trade during earnings because it's a gamble. But since it's still on highs, right? If the market is going to pull back, this is a good one to watch. And it's simple enough to risk. Risk 183.17. That's where your stop would go. As if it is going to trade up the daily supply, then you don't want to see a daily close above 180.79. And you could target 174. 17 days is kind of close, but at 17 days, the options are cheap. You know, you could buy the 180 put, and if you close the daily above this line, exit it. Google just made fresh highs yesterday. Damn. All-time highs. Meta pulling back, but at support. Tesla getting killed. Netflix, you know, looks more like consolidation than anything. And AMD. That doesn't bode well for Nvidia. So many people were just assuming this thing was going to hit $1,000. There might be a lot of people caught up here, long. So yeah, if this were to roll over and we get the energy sector to roll over, financials to roll over, the markets are going to roll over. All right. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.